If you haven't been with us for a while, or maybe you have and you've seen the cybersecurity manual we put out in 2024, it's been 2 full years since we did how to invest in cybersecurity companies. And that manual is still very relevant if you're looking for the definitions of some of these cybersecurity types, especially. We're not doing a refresh on the entire manual because it becomes too tedious. And we know that most do not have all of the time in the world to read each and every detail. So we're going to go through and talk about what's happening right now in the cybersecurity space. Where should you think about investing and how do you go about doing that? Mm-hmm. And this ties in nicely with presentation we did a couple weeks ago about the investor's checklist, going through and looking at companies critically, both on a quantitative value, but also on a qualitative value. So we'll talk about that towards the end of this presentation. We'll start with our core cybersecurity basket, which is right here. These 5 companies: Palo Alto Networks, Fortinet, CrowdStrike, Cloudflare, and Rubrik is a newer addition just this last year.
All of these, except for Rubrik, are long-term holdings for us. We still like them very much. Rubrik still has not met our 2-year long-term holding target. It's not even been a year since we initially purchased that. So that is the new one. And what we're excluding from this is companies that have cybersecurity as part of their operation, but these are just the pure play cybersecurity software and network security pure play businesses. And we'll get into some of those other companies that have a hand in cybersecurity, but it's not their primary business or their sole means of revenue. So by way of review, this is just the last 2 years, going back to the start of 2024. The reason why we scrapped a full refresh on the manual is, as Casey said, it's still relevant. A lot has changed. And so we wanted to focus on what has changed. And we are at a critical point. In 2024, obviously, the market was in a very different spot. 2023 was a great year for chip stock investor. The NVIDIA moment happened. Cybersecurity was doing quite well. And it was the right time to kind of take the semiconductor industry flowchart and apply that to the cybersecurity industry as well, which we'll talk about here briefly in just a moment. At this point, though, that initial work we did on cybersecurity value chain analysis, also the semiconductor supply chain for that matter, has really gotten commoditized. There's 1,000 people on Substack doing the same thing. So we're moving on. We're not interested in just kind of rehashing someone else's stuff because so much has changed, especially in February. And you can see that in the stock prices of just these 5 companies that make up our core basket. But even still, after getting hit pretty hard in recent months, especially SaaS Apocalypse, Software Apocalypse, February 2026, it's been a pretty fantastic run for these companies in just 2 years. We'll take it. Palo Alto Networks is the standout underperformer, just finished the merger with CyberArk. So that's a disruptive event as they digest that and a new round of acquisitions, which we talked about already a couple of weeks ago. But overall, this is great. We will very much take this kind of performance every year if we could. High teens to low 20% CAGR. If you're not happy with that over the long term,
there's nothing we can do for you.
And if you go back 5 years, it's even more incredible.
And why is that? Because of this. Cybersecurity is very much a secular trend. We've updated this for 2026. Our expectation is around $250 billion in annual global spend on cybersecurity. Last year, $215 billion. Still expected annual growth rate of around 12% each year in the next 5 to 7 years. Very much a secular trend.
And the reason for that is because, especially when enterprise cybersecurity software really became a thing in the 2000s and the 2010s, as use of the internet very quickly entered the business world. And then in the 2010s, especially, that ramped up with the use of the cloud. And now, of course, with AI, when chips get installed, infrastructure gets installed, what very quickly follows on the heels of that? Enterprise cybersecurity. Up to this point, we've talked about everything being basically siloed into different product types. So for network security, old firewalls that protected a physical location, cloud security, when companies started moving their workloads to a data center accessed via a public internet connection, endpoint security, especially during the pandemic, everybody was working from home. So everything's been kind of siloed. We've talked about this in the past, this tug back and forth between development of centralized compute, mainframes, data centers, later the cloud. On the other side, the birth of more personal and then later mobile computing, invention of microprocessor and PCs. The internet brought PCs to a lot of people's homes for the first time in the 90s, mobile computing in the 2000s and 2010s. And then all of this is basically converging into this, brings us to this point in time right now where AI basically makes use of all of it. And that creates a colossal amount of risk for companies to manage that want to put AI to work. And if you think about why that is, if you have these AI agents now running around installed infrastructure from private data centers, the cloud, all the way to user devices, and not just data in storage, but also data in transit, data that's being created in real time as sensors continue to get deployed in cars, manufacturing equipment, cameras, so on and so forth. The AI agents are ideally, at some point in the near future, going to access all of that. They're going to automate decisions. And so now all of a sudden, if you're an organization that wants to make use of this, you need a cybersecurity platform that can cover every single base. Otherwise, you are going to get hit with a damning cyber attack that is embarrassing at best and really horribly disruptive, possibly even business ending at worst.
I'm effectively scared.
That's both the promise and the downside of AI.
It will end us. So what are we talking about when we're talking about cybersecurity when it comes to the hierarchy of the economy? We've got it highlighted here for you, the infrastructure layer going up to the products and services layers. Every branch is affected and needs to be affected by cybersecurity.
Mm-hmm. Cybersecurity software itself is basically a type of infrastructure software, infrastructure management tool. So it fits into that middle layer on our hierarchy chart. But actually, how does it get distributed? How does it make its way into customers' IT and business operations? How does it get there? We're going to zoom in on that here because it helps answer some of the questions surrounding AI. How is AI a threat to cybersecurity? And actually, even more broadly, software itself, because this chart we could actually recreate for any software vertical, really. So let's break it down. We're going to start at the bottom. We're talking about the creation and then ultimately distribution and install of cybersecurity software. So a supply chain, as it were. And so we're just going to reuse that hierarchy system. Let's kick it off here with the software itself,
which we're going to call the product layer.
We're going to take some cues from the marketing gurus on social media.
All right. The product layer. So these are companies, we've broken this down to some of the biggest players, the pure play players, Palo Alto, Fortinet, CrowdStrike, Zscaler, Checkpoint, all providing the product.
We've excluded Gen Digital from the mix. And so these are the top 5 big cybersecurity pure play platforms.
So when you move to the second layer, the cloud infrastructure layer, how are we illustrating the business model for, let's say, these 5 companies? How does it move up to cloud infrastructure, the hyperscalers?
Mm-hmm. This is the gist of all of this and is going to help with understanding the risk to these businesses. So at that product layer, these companies develop the technology, the cybersecurity tech, and they build the product. These days, most of that product tends to be hosted in the cloud. Sometimes companies buy it and they install it on premises in some private data center or network, but with everything being networked together, ultimately, let's just call this all cloud-based software these days. The problem with that for these companies is to build product that's hosted in the cloud, you have to pay that middle cloud infrastructure layer. You have to pay cloud rent to those companies, to AWS, Azure, Google Cloud, Oracle Cloud, wherever. You have to pay for ongoing compute and storage for your product. And then it's not just a cloud infrastructure layer, it's also a distribution layer too. Did you know all of these cloud companies, AWS, Azure, Google Cloud, Oracle Cloud, IBM, we stuck at the top here, but IBM Cloud as well, they all have marketplaces where customers can shop for products and services. And if they make a purchase, let's say for CrowdStrike endpoint cybersecurity via one of these cloud marketplaces, oh, hey, there's another fee that you have to pay the cloud company. It's usually like 3% of the transaction size, depending on the size and the type of deal. It can be as less as 1.5% of the deal size.
It's like the App Store.
Yeah, it's like buying something on Android. There's another fee involved that goes to the cloud infrastructure companies. We'll come back to that because this feeds into why companies like Microsoft can make the claim that they're the biggest cybersecurity company in the world. They said last August, $37 billion in total cybersecurity revenue that they did in fiscal year 2025. That's because they have their own products that they sell. It's because they're probably also counting revenue from cybersecurity companies building and hosting their product in their cloud, also the resale of those products. And so whenever something gets sold via Azure, they get a cut of that deal as well. Pretty crazy stuff. This is why these cloud companies have become the greatest business model from an investment perspective that the world has ever known.
But wait, there's more. The customer integration layer. Some of these big companies like Deloitte, PwC, EY have lots and lots of customers. And some of those customers need cybersecurity.
They'll provide accounting services.
They also provide auditing services and all kinds of research. And so they know where there is a break in the system. Maybe they also want to recommend some of these cybersecurity companies, the product layer. And so they also are involved in integrating the cybersecurity software.
And taking a cut, another hand in the cookie jar. And how this tends to work, let's say it could be a resale agreement. Basically, a cybersecurity vendor may want to augment its sales force. And instead of having a direct sales force, they may go out and strike a deal with one of these companies. So they basically become an extended part of your sales force. They're resellers or retail. They buy your product wholesale and then mark it up and resell it to their customers. They could also provide consulting services that would be more like what Gartner provides or McKinsey or IDC, Forrester. You kind of want to cozy up to those companies if you're a software vendor and make sure that they like your technology so that they recommend your product when they're consulting their customers. It could also be an MSP, managed service provider type of agreement. So that's again where some of the big accounting and auditing firms come into play. Also Accenture, IBM have big businesses where they don't just provide consulting, but they may actually purchase various cybersecurity products or software products in general, bundle them up into a managed service and sell that to clients as well. Either way, if you're a company developing and trying to sell your product, that's another spot in the supply chain where you're going to have to reduce your price a little bit so that the retailer can mark up the sale and turn a profit as well. It's just another point in the system where you have to account for someone taking a cut of your work.
And we'll just add a few more possible companies to this mix as well. They're in the cloud infrastructure layer. We have CoreWeave, which is primarily just an infrastructure company at this point, but Nebius certainly has a little bit of software support that could branch out into this similarly as some of the other hyperscalers.
And they also do have the small beginnings of a marketplace. Let's not call it a cloud marketplace. Maybe it's like a GPU accelerated computing marketplace. So if you're a new AI native cybersecurity startup, maybe you would actually want to build within a neocloud, and they're going to get a cut again. Eventually, if they choose to start providing distribution services like the traditional cloud providers, there's going to be a cut that you would have to pay to them as well.
And then what about OpenAI and Anthropic? Seems like a really natural fit there that they would also get involved.
This remains to be seen how exactly these companies are going to monetize. Will they launch more robust cybersecurity services, something like the Anthropic Claude cybersecurity product that was announced a couple weeks ago? Or will they just play more on the integration layer? And so if a cybersecurity customer says, hey, I want to automate more of my cybersecurity, I want to integrate AI agents from one of the AI labs into my stack. Okay, there's more work for you to do as a cybersecurity vendor or a software vendor in general to provide that integration. And ultimately, money is going to change hands whenever there's integration work like that being done. So this is the reason why software companies, including cybersecurity, which is a very sticky, mission critical type of software vertical, has been hit so hard in February. You have all these points in the distribution and integration of the software into customers' operations, and lots of companies along the way with their hands in the cookie jar. And now you throw in AI into the mix, and there's yet another expense for you to have to juggle around and possibly deal with.
So it's one of the best places to invest if you're looking at these cybersecurity companies?
We'll just keep coming back to this. There are no moats in software. That doesn't mean you shouldn't invest in software companies, but it's really difficult for any software pure play company to compete, especially in the cloud era when you're paying cloud rent to these guys. And on top of that, also paying them for product distribution and sometimes even customer integration. If you want to invest in cybersecurity or any software specific market, you have to start with the hyperscalers, which combine elements of hardware and infrastructure with software together. It is just a much better business model. Dare I say, even maybe a moat.